Hey guys, what's up? Welcome to this channel. It's your boy Sammy. In today's video, I'm going to be talking about break and retest trading strategy. Now, it is always advantageous to be in the market and know what the market is doing, and mostly when you're always on the higher time frame. Now, I always tell my students to always do their strategy in the higher time frame because it gives you what higher level of win rate. Okay, now a break and retest strategy happens when there is an asset move in the bullish or in the bearish market breakout, and it retests it back to the previous resistance or support zones. Now, resistance actually talks about a horizontal zone in the market where the market is expected to resistance where sellers are expected to take the market to the downside, while support zone happens to be a zone where buyers are expected to take market to the upside. Now, when dealing with a breakout strategy, there is something involved, and that is where resistance turns support and support turns resistance. Now, let's see this. This market was actually on the downtrend, but there was a breakout. So let me draw a trend line so you know the market is actually on the trend. So as you can see, the market is bearish. Like this. So I always tell folks, please try to always identify the major swing points. The major swing points tells you actually what the market is doing. Now, if you take this market previously, you see the market is actually bearish. It's actually on a bearish trend. But something happened here. There was a little bit rally here. There was a rally here. Okay, let me take this out. There was a rally here. All the zones here, the market was actually rallying. But folks that doesn't understand what the market is doing will be buying here, where this trend line is. Some folks will be buying here, this zone here, thinking the market is going to go higher, whereas the market is actually bearish. So what you should be doing here is waiting for the market to come to break. Now, what happened here? There was a break. There was a break here. There's actually a break. The market broke to the downside and down came back to this zone here, where it came back to this zone here, this zone here. It came back to this zone here. So what we're expecting to do is get an entry here. Get an entry here and ride the market to the what? To the downside. Now, let me quickly identify something. This is in a bearish market. This is a bearish market. As you can see, the market is going giving us major swing points and moving to the downside. So what you want to do is factors that you need to consider before getting involved in a breakout strategy. Now, the first thing you need to do is identify the market flow. What's the market flow? Now, if we move backward, you see that this market is actually bearish. Sorry. See, the market is actually bearish. From June, the market has been bearish. So let's do analysis from there. The market has been bearish, so we don't want to be looking for opportunity to buy it. So some folks will be saying, "Whoa, this is a double bottom, so I think I need to get an entry here and ride the market to the upside." You would be wrong, because the initial trend is bearish. So you want to stay with the market flow. It gives you higher win rate. Now the next thing you want to do is spot out resistance swing point. Now this is a major swing point. So let's say for an example, this market was here. What I want to identify is a major swing point, and one is this, and the second one I'll be drawing is this. Okay, Let's just take this out. So these two lines here will be my major swing point. Now, why is it my major swing point? All this rally in here gave us what? Since I know the market trend is bearish, I'm expecting what? A breakout in this zone here, so I can look for potential what? Entries to ride the market to the upside. So what did we see happen? The market actually what? Broke out. It actually came now and gave us what? The resistance zone now has actually turned to a support zone for us to what? Ride the market to the downside. Now, the last thing you want to wait for is the breakout. Now, if there is no breakout and there is no pullback back to where the swing point is, I don't think you should be getting an entry because it's risky. Traders are expected to what? Get entries at this zone here. This zone here. And let's say you get an entry here, your risk is going to be very low. It's going to be very low because you actually entered what at the right time, and the risk is going to be low. I discovered something that whenever you get involved in a chart and you are at the right place where the smart money wants you to be. Now, this is a major swing point. Why I said where the smart money wants you to be is they are expecting you to wait until they run out of liquidity here. They run out of liquidity here, which happens here. See, this swing point actually ran out the liquidity that was sitting here. All this zone, they took out the money that was here. All these early sellers, they took them out. So smart money actually wants you to what? Be patient and wait for the major swing point, which was this. Now, if we draw a trend line, you see the major swing point is touching these two lines. Okay, so I said the major swing point. So if you get an entry here, you're going to be safe, and the next entry you want to be entering is here. So the breakout strategy keeps happening. It keeps happening. It happened here also. See, support zone. This was a support zone that actually made this price to move higher to this zone and give us a swing point, and then it came back to that what? Major swing point. So I always say, if you want to trade a what? Breakout strategy, you want to wait for the what? The last swing point to be what? Turned into a support zone. That resistance zone actually turned into what? A support zone for you to get an entry to take the market what? To the downside. Now that's for the bearish market. Now let's talk about bullish and see how we can look for potential entries. Now let's say, for an example, there was a little bit rally in here. There was a little bit rally in here, and don't forget our strategy, like we said, the breakout. So I want to identify a major swing point. This was a major swing point. Because why? This was actually the last. This was actually the first, rather, the first institutional order block that took market to the what? To the downside. And this also was the last one. So when the market came up, it broke this zone here, and it actually what? Pulled back to it. So if we want to get an entry, our entry is going to be here. Get this. Our entry is going to be here. You're going to be getting entry here to take the market to the what? To the upside. Because why? Does actually showed us that there was a breakout. So some folks get confused, and what they want to be doing is actually selling here. They want to be selling at this zone here. Yeah. When the market comes back to the zone, so what they want to be doing is selling. You'll be wrong. Because why? This actually is going up. the trend is about to change, and what I can see here is looks like a head and a shoulder, but it's not really clear though. But you can actually see it as a what trend change, because what I saw here is that structure was broken. Let's see this is a strange change. So a structure was broken here. Let me point this out. There's a break of structure here, so we should be looking for potential entries. And guess what, the market came down. If I'm not clear with this, I'm going to be waiting for the breakout strategy for me to get the market to the upside. Now I discovered that whenever you get a breakout strategy, you're always safe. Now, what are the ways, the factors to consider when you want to trade the market in a bullish market and you want to get an entry in the breakout strategy? What you have to do is, one, identify the market flow. Now we know that there's a break of structure here and equally a trend line break. Let me easily draw this thing here, this trend line, so we'll get it clearly. Should I get it from here? Okay, let's look for the first one. Okay, this is a trend line break, so we shouldn't be looking for sales. The structure has actually changed. Structure has actually changed because what, there's been a break of structure and also there's a trend line break. So what we need to do is, one, we know that the market flow is about to change from a bearish to a bullish. Now, if you watch the video where I talked about the 4 stages in which the market moves, the market has actually moved in the downtrend, and now it has gotten to accumulation stage, and now the next stage is what, an advancing stage. Now, since we know that there's a rallying here, so this actually is an accumulation stage where we expect price to break out. And what did we get? We got a breakout, and it shows that the market is about to turn into a bullish trend. Now the next thing we want to do, since we know that the market is about turning bullish, the next thing we want to make sure that our resistance zone turns into our support, which happens here. So this was our resistance, and now we have it as our support after the breakout. So wait for the breakout, and the next thing is the retest, and we got it. So let's see what we got as an entry trigger. It's crazy, but I'll see this as a morning star. Yeah, I see it as a morning star because it ran out the liquidity that was here. It ran out the liquidity that was here. So ran out the liquidity that was there, pulled back to the downside, and actually gave us an entry trigger to take market to the upside. So if you were to draw this trend line here, all we're seeing is something like this. I wouldn't want to identify this as a trend line. Okay, let's draw it from this point. From where we have the breakout, let's take it there and see. Okay, now we have it. Please, if you haven't watched the video where I talked about trend line, you may be wondering what this is, but this was a run out of liquidity. This was the handbook of smart money. They run out the liquidity here. So if you can see, I said trend line should be touching 2 major swing points or 3 major swing points. So in this case, we have up to 4 of them. So this actually was just a run out of liquidity. It's really not the major swing point. It's just to run out of liquidity. So that's all for this video. In case you have a comment in the section below, you can leave your comment there. And also in case you want us to drop a video like this in the future, you can also notify us. And if you're yet to subscribe to this channel, don't forget to do so. See you.